Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our banking conference. Our next live presentation is from Main Street Financial Services. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book Meeting in the top toolbar. Main Street Financial Services trades on the OTCQX Best Market under the symbol MSWV. Welcome, Main Street Financial Services.
Good morning, everyone. My name is Mark Whitmer. I'm the Executive Chairman at Main Street, and with me here today I have Todd Simcoe, who is our Chief Risk Officer, and Jay Van Sickle, who is the President and CEO. We're happy to join. As I start talking, one of our themes here today is increasing shareholder value, and that is why we are here listed on the OTCQX, and we feel that gives us a good exposure. But wanted to give a little bit of a background, just the bank in general, since you may not be familiar with the bank, but you may be familiar with us. I started in community banking as CEO at First National Bank in Orrville, and that's where I met Jay. Jay was the CFO at that time. We were there 2010 to 2015. We ran a bank that was approximately $500 million in assets, and it was a very high performing bank. And I just wanted to go through a little bit of history. The past couple years, if you're looking at financials, there's been a lot going on, so I just wanted to give you, at First National, we were very successful, very high performing, and then again, because of looking out for shareholder value, we did merge with Farmers National Bank in Canfield, Ohio, which again delivered a good, very nice return to our shareholders. After that, Jay and I both ended up here at a bank, and our bank charter is under the name of Wayne Savings Bank, chartered in 1899. So we are a long-running community bank. However, during the merger here with Main Street Bank, we did take on the Main Street Bank name. But just to back up a little bit, 5 years ago, Wayne Savings was about $490 million in assets, $376 million in loans. And we had organic growth in loans and assets of over 20% each year there, from 2020 on. So we were doing very well, high performing. In 2022, which was kind of the last clean year before the merger, we had a ROA of 1.34 and an ROE of 19.37. So we were a very high performing bank, but with our growth, we really needed to, again, to increase shareholder value, we needed to keep growing. And the opportunity came for a merger. And we were really in need of deposits, as our loan to deposit ratio had gone over 100%, and we had grown good loans tremendously. Asset quality was fine shape, but we really needed those deposits. That's where the opportunity came in to merge with Main Street Bank. We reached an agreement, and whether you say fortunately or unfortunately, in February of 2023, which then, as all of you probably realize, in March of 2023, Silicon Valley Bank went broke. So that put us in a position where this merger, we feel that everybody involved did a great job getting through this, but the regulatory scrutiny, very few mergers were done in that time period. However, it did take us, longer, a year and a half or so, to actually get the merger done. So that's why I wanted to take a look back and show you where we expect performance to be. As I mentioned, that we expect to be a high-performing bank, and we are getting there. You know, as we look forward, so going back 5 years ago, we were $490 million in assets. Today, we're $1.4 billion in assets, and we've done the same with loans. 1.1 billion in loans, 1.2 billion in deposits, compared to 300 and some million in loans just 5 short years ago. What this merger has done for us, again, it brought Todd to us, so we're happy to have Todd here as Chief Risk Officer, and much other talent. In addition to the talent, and Todd will talk later on in the presentation, and Jay both get down into some of the details on the financials and what has happened since the merger. But we integrated our core processing systems. We've been able to really improve our technology because of the merger. And so that puts us in a position to be able to continue to grow and continue to become more liquid with the shares, and it just gives us a lot of opportunities. Again, as I mentioned earlier, on the legacy Wayne side, we've always had very strong, good loan growth, and we'll talk a little bit more about what that's made up of. But really what we saw in Main Street is some really good core deposits here in Wheeling and small towns up and down the river, and that has really materialized for us, and Todd will tell you a little bit more about that. Some of the products, we've got, as you can see, Zelle and some other technology improvements that have helped us greatly. And then you can see on the, we have delivered already, even though we're just a short time since the merger, our financial performance has been on the upswing, and we know that it will continue. The deposit growth, and Todd will talk about that again, has been just tremendous. So really, our vision to be able to grow these deposits and supplement our loan portfolio has really come through for us. So I'm going to go ahead and pass it on to Todd, and he will give some more specifics.
Well, thank you, everybody. If you can see on the slide there, I just want to give you a quick highlight overview of our executive management team and our board of directors. I think the thing here is just the wealth of experience and knowledge across the board through a wide range of different backgrounds. And I think the thing that makes Main Street Bank successful, which you don't see on the slide, is all the great people underneath. Approximately 170 employees now. So we're happy with the staffing model that we got, and we've seen a lot of success through this. And the board has given us the opportunity to operate in Worcester, Ohio, Wheeling, West Virginia, and throughout. And I'll talk a little bit about that geographic footprint in a minute. So just a wealth of knowledge there on the board. You can see the franchise overview. I think the thing to note there is we're a community bank. We have the same core values when we came together. We really look at franchise value as a whole. And when we think of franchise value, we think of shareholders, customers, community, and employees. I think that's what's made Main Street Bank successful in the past, Wayne Savings successful in the past, and will continue to make us successful in the future. Again, I think we have the infrastructure not only for today, but for also tomorrow. And as you can see there, and I'll talk a little bit about the branches, we have a nice branch geographic with the 19 branches, no overlap when we came together. And I think what that has allowed us to do is Mark and Jay have given me the tools on the retail side to really push great products and services. We've done that through deposit growth of over 75 million since the merger. And with that, we were able to pay down wholesale funding, and that has allowed us to improve margins and do a great job there. So the retail team has done a great job. We don't look like we're slowing down there on deposit growth. We've been marketing quite heavily, advertising our impact checking and money market accounts and HELOC products. So those are just all great things that we've been out in the community doing. And I think that what that also has allowed us to do is our loans to deposit ratio has got below 100% and allow us to get the efficiencies that we need. And I think the key here when we think about community banking is what makes us different at Main Street Bank is we're we're true to those core values and really the ease of transaction with Main Street Bank. So we still want to remain a community bank in our thoughts and our processes and policies. And I think, though, we want to deliver to the shareholders the great return that they deserve. So on to the next slide on page 7 there. You can see some highlights of just how many customers and things that we're doing there. And I know we like to talk, we're not an IT company, but with that being said, we're a fast follower. When it comes to technology, we introduce Zelle. We think we have the mobile banking products that offers both business and consumers great things that they can do with the bank. Again, we have that commitment from the board on technology, and we're rolling out a new mortgage banking application here quite soon. So all these great things have allowed us to grow the deposits and be very competitive with not only community banks, regional banks, and national banks when it comes to technology. So just really proud of the great effort and the teamwork on that. On the next slide, I just wanted to highlight the geographical footprint. And I think what this does is, we're going to markets in the smaller towns, non-bank areas, and really making a difference in the community. We really made an emphasis in the Wayne, Worcester area to get brand recognition out there with the Main Street name and the name change. And down in the Wheeling market there, we've really introduced new products and services for our customers. And again, a lot of the growth that we've seen has come from the Wheeling market and the deposit side, but also we've seen growth in Worcester area and around that as well. So really just a great combination between the retail and lending team doing great things there. And I think, as we continue to grow, there's a lot of opportunity organically or through acquisition on the branch side that we can fill in some of those gaps. The next slide I have here is just a little bit more detail. We're not into the big markets in Cleveland, Pittsburgh, or Columbus, but it just allows us to have those metro areas very close to where we're operating in. I mean, we are very close to a tri-state bank here within the 3 states that we can lend money, get deposits in, and allow us for a great opportunity to grow. So just a lot of good things going on with Main Street. I get to do the exciting part, the marketing, the retail, tell you guys all the great success. But we really have a great footprint that allows us to grow not only today, but for tomorrow as well. So with that, I'll turn over to Jay Van Sickle, our CEO and President, and he'll go through some of the financial information.
Thank you, Todd. Before I start my commentary of the financial highlights, I would just like to again take this opportunity to thank all of you for your interest in Main Street Financial Services Corp. And Main Street Bank. The last 12 months have been an exciting and transformational time for Main Street. Much of our integration of the team, systems, and processes have progressed as expected, and we are in the final stages of our post-merger integration. We are confident that we'll be able to unlock the full potential of the transaction. Our strong financial results for the 3rd and 4th quarters of 2024 are reflective of that integration success. Our community bankers have been able to grow the loan portfolio since the merger and have been particularly effective at adding retail deposits. In our most recent earnings release on January 29th, we reported net income of $3.2 million or 41 cents per share for the 3 months ended December 31st, 2024. The return on average equity and the return on average assets for the quarter were 11.69% and 0.90% respectively. We believe we will be able to continue to attract local deposits within our market area and increase our market share. We should be able to continue to improve our loan-to-deposit ratio, as Todd mentioned. As of December 31st, 2024, the bank held no broker deposits compared to approximately $117 million of broker deposits as of December 31st, 2023. We have reduced our reliance on wholesale funding and broker deposits by approximately $120 million over 2024. Main Street Bank has a strong balance sheet and is well capitalized with strong liquidity. We've met our profitability expectations for the second half of 2024 and are optimistic we will continue to improve profitability in 2025. We're happy with our 2024 growth in these areas and optimistic of continued success in 2025. Our local economy is robust and diverse and will support our growth expectations. Business and consumer confidence in our market area remains cautiously optimistic. We are pleased with our ability to work through integration issues while delivering solid earnings. I believe we still have some tailwind as it relates to profitability in 2025. We are budgeting a modest expansion in net interest margin for the year as loans with higher rates are originated and rates on existing loans reprice from lower levels. The efficiency ratio at the bank is closer to 59 and 60% when the amortization of the core deposit intangible is eliminated. Management believes we will be able to maintain an efficiency ratio in the 50s once we work our way through the remaining merger integration projects. We historically have maintained a minimal investment securities portfolio in the range of 10-15% of assets. Our ability to originate higher yielding loans, as discussed by Mark earlier, is really the primary reason the portfolio is smaller than your typical bank. It exists primarily for liquidity purposes. Our great team of lenders that continue to grow our loan portfolio. Our local market economy is diverse and healthy. The agriculture, manufacturing, and meds and ed sectors provide our communities with many opportunities for business expansion and development, as well as employment opportunities for job seekers. Recently, Worcester was named as one of the micropolitan 5. That is fairly typical. I know many of you probably track micropolitan areas, and Worcester, historically through the years, especially in the past 10 or 20, has come out on top of many of those organizations. It's just another highlight of the robust economy that we have, in Wayne and really surrounding communities. We've mentioned previously that our outlook for loan and deposit growth is strong. We believe we will be able to expand NIM, net interest margin, in 2025. The third quarter of 2024 was slightly higher than the fourth quarter due to some early payoffs of some acquired loans. The board of directors takes its responsibility for managing the company's capital account and maximizing shareholder value seriously. Current capital management strategy involves returning cash to shareholders in the form of dividends. The board increased the quarterly dividend to 14 cents per share immediately following the merger. Next page highlights some of our growth in the deposit area. I know, as Todd mentioned earlier, one of our key accounts is our high balance money market account, which we started de novo in the third quarter of 2023, and now represents approximately $200 million of deposits. As Todd also mentioned, our marketing over the past 12 months has really led with our 6% impact checking account going along with that money market account. That account, our impact checking account, requires 10 debit card transactions for $10 or more to receive the special rate. Also of note, within our deposit portfolio, that 85% of our CDs currently mature in 1 year or less. Those of you familiar with the management team knows that we take operational efficiency seriously. We believe we will be able to achieve all the cost savings outlined in the merger announcement from 2023. For 2025 and beyond, we should be able to maintain an efficiency ratio at the bank in the 50s as we continue to grow the organization responsibly.
Okay, I'll wrap it up here quickly with just a couple thoughts, and we have a slide up here on our asset quality. And I won't go into details there, but really, as a bank, what has allowed us to have such outstanding asset quality is really the diverse loan portfolio that we do have. As Jay mentioned, really the kind of the core economic growth. Worcester is just a tremendous market for it, but surrounding that, we tend to, we kind of call ourselves the bank of the county seats. So we really look at small to medium-sized towns throughout all the counties in eastern Ohio here and now northern West Virginia, and focus on a lot of the places that maybe the largest banks have left. Now, we are in that kind of triangle between Cleveland, Pittsburgh, and Columbus, so we do get some bigger deals on the outskirts, but we also have agricultural lending and just a lot of different types of lending. So we really don't have any concentration in any type of lending, and that's served us well. Just to wrap things up here, and I see there have been a couple questions regarding shareholder return, and really that is our focus. As a bank, we are looking to maximize shareholder return. And there's many ways, you know, in the past we have done stock buybacks. As you can see, we've done a large bank deal, and going back in our history with Jay and I, we've done combination, and this was really a merger of equals type deal we did here, but we look for all different types of business combinations, opportunities, and all different ways to maximize shareholder return. All that being said, you know, the community banking is what we really excel at. We give back to the communities. One thing we've talked about recently is having savings rates that are, we would, in other words, we would rather pay our customers to deposit funds in our bank than to borrow from the Federal Home Loan Bank. So we try to serve the community in many ways as we can and give that customer service. We've improved all of our technology, and so we've excelled there. And last but not least is our employees. You know, I think I've always been a proponent of, I know as banks get bigger, you tend to think systems can overcome employees, but really it comes down to people. And the one asset I think that we have that's superior to all of our competition really is our people. And we're going to be only as good as our people that work for us. And we just have an outstanding group of talent in our organization. With that being said, I'm going to wrap it up here. I don't know, are there?
Yeah, I think we got a couple of questions and answers, Mark and Jay. I'll read them off to you, and I think together we can answer them. But one of the questions we got here is, what kind of deposits drove the growth in the fourth quarter, and is there any seasonality to the flows? Jay, you want to take that?
Yeah, I don't. Right. I mean, part of, you know, we've been pretty successful pre-merger of growing our deposits at Wayne Savings, and we felt we had really an attractive group of products. We call them the Fab Four, and within our marketing area, it's the money market account that I mentioned earlier, CD special, which has been you know, a sub 1 year CD special. You've got our impact checking, which is 6%. And then the fourth of the Fab Four is a 1 year $4.99 lock on a home equity loan. So I would say our growth primarily is from our money market account, and CD special would be second. Although if you talk to people in our market area, they're probably most aware of our 6% impact checking account, because that's what we lead with commercials and billboards. So I think there was I don't really think there's a lot of seasonality with those. There's a couple questions on here. I'll just take a couple that I've seen in here related to buybacks. As most of you know, who know us from our Wayne Savings days, buybacks was certainly something that we utilized as part of managing the capital account. I would say over the next few years, with the restrictions that have been put in place related to capital ratios, that buybacks will probably be something that we'll have to wait until 2027 on. but management is very well aware of the advantages of buybacks in maximizing shareholder value, and we'll use them in the future if we see fit. Being an SEC filer, no, not at this point in time. You know, our goal is really to get in the Russell. I mean, 2000. If there's an opportunity for us to do that with some sort of a deal, I know that's one of the questions that's been mentioned. You know, we would certainly entertain that. We think there's a lot of upside to becoming part of the Russell 2000. And when we get to that point, I think we'll, you know, that is something that we will have to become an SEC registrant again. You know a little bit about my history. I've deregistered 2 banks in an effort to save, you know, 6 figures and more. When we get up to the appropriate level, Russell 2000, we would become an SEC filer at that point in time if you wanted to ask my opinion.
All right. I think that's all the questions we got for today, and I think if you need to have any, you know, we have availability for one-on-one meetings. We'd love to do that. Our contact information should be available. Again, Todd Simcoe, COO, Mark Whitmar, Executive Chair, and Jay Van Sickle, our President and CEO. We thank you again for your time today. You know, hopefully, you know, our May shareholder meeting, if you're a shareholder, we'll get to see you there. But again, please feel free to reach out anytime, and thank you again for your continuing support.